The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Happy Thanksgiving to everyone. For you and your families, please be safe. Do your social distancing. Make sure the wings and the drumstick are separated by at least 4.5 inches, and I think we'll make it through. We'll have to see what's going on after all this is over. We'll have Mr. Shane Smolan, the wolftrader.com, will be our guest at the half-hour break to talk to us about some of these things that are going on with the COVID virus, and then also the what's going on with the stocks. I'll cover the stocks in just a minute, but first of all, when I posted the charts for the NASDAQ, wow. Let's try to put these words together, Larry. I posted the charts of the FTSE and also the DAX. Pay close attention to the DAX because you can see the very first chart that I posted, it could have gone in either direction. And then what you see on the second chart is what happened. It went up and made a perfect ABCD pattern, a huge butterfly up there, then another little Gartley on the downside, and now we're setting at major support as we come in here. Now, I do not know. Let me double check to see if we have David White in the room today. I hope we do. We never know, but we'll take a look at it. Anyway, David did a study on the market, folks, the day after Thanksgiving, and believe me, it goes back 35 years, and for that 35-year period, it was a very, very depressing. I mean, it was a slight positive, but it really is very, very slight bias to being up the day after Thanksgiving. I always thought it was bigger than that, but these figures don't lie. So, they're really, really quite not alarming, but they're informative. So it's telling you there's not a huge positive. Now, remember, we are in a really strong uptrend in everything. So the odds of a sell-off at any one time certainly could happen. But, with the market exploding like it did yesterday, coming into, we only have a day today, which is a light day. And then Friday is, I believe, a half a day, if I'm not mistaken. I'm not sure if it's a half day or not on Friday. I thought that it was, but I'm not sure. That will be closed here at TFNN, which is good. Folks, I hardly ever worked the month of December when I was at Drexel. I mean, I traded all the time and, had to do that. But the idea at Drexel was that if you didn't have your money made by the end of November, you were probably not going to have a very good year. And so most of the time was spent with, the parties for Yom Kippur, not Yom Kippur, Hanukkah. Golly, gee, Larry, what's wrong with me today? I even got a little bit of a, thank you, Marshall. Happy Thanksgiving to you and Lynn also. I don't know why. I had a good night's sleep last night, too. I don't know why my words are slurring, but we'll try to get through this today. Let's talk a little bit about our good friend over in New Jersey, the cattleman. He has... you remember we talked about Jeff, the fact that he bought down there at that 109 and change in the cattle. We now hit 114. That's 5 handles. And what he did was he explained to me, in order to keep his risk at a very low level, what he did is he went into the option market and sold an option to take that premium, and that locked him in at a certain profit, which is, pretty good. Now, I guess he can change his mind, when it comes in to Friday or even Monday, but we'll follow this through to see what's going on, and maybe Jeff will let us know how he ended up with the trade to see if he followed it all the way to the ABCD pattern or how he handled it, because that's what we were looking at yesterday, is how much he had to risk. And now his risk with having over a $2,200 profit in that cattle trade from that Gartley is, that's pretty substantial. So he's locked some of it in, and that's good. And I think that's the way we should look at some of these things as we move on through the rest of this week. All right. let's talk just a tiny bit about what in the world happened yesterday. We had an absolute perfect Gartley set up in the S&P at 3606. It had a 14 handle, believe it or not, folks. It had a 14 handle profit as the market was coming in right after we finished our show here yesterday. The market in the NASDAQ, and I put it up here, you'll see it was a little bit after 10 o'clock, about 10:15. We were making a beautiful 61% retracement of that high that we had made several days ago. And that tells us that was, and look how it exploded out of there, folks. That's what happened. It just literally blasted through. Now, just follow me for just a second. If you're selling the S&P at 3606 and it goes down to 3592, that's a 14 handle profit of $700. Okay, now there's nothing you can do about that as far as how quickly it went up and it just went straight up and you'd have got stopped out. There's nothing that you could do about that except that with that much strength. And if you'd seen that was the 61% retracement on the NASDAQ, which we didn't have that time allotted to us yesterday, so then you have to get out of it. I saw that happening. I actually was chatting with Tom at Trader Tom, and he was buying right down there, and it was a beautiful, folks, with the NASDAQ down 100 handles yesterday, the Dow Jones was not even down on the day. What other kind of signal do you have to think that, wow, maybe this market is a little stronger than we thought? So just remember, when you see those things, you got to try to protect yourself as best you can. And when you see a market exploding off of those levels, you need to pay very, very close attention to it, at least the way I look at it for today. Now, the odds that we've had such a run here, we could have a little bit of a sell-off, a large sell-off, or no sell-off. So I'll be ending the day here at 10 o'clock. I'll not be doing anything any more than what we're looking at right now. Several questions about the gold market. Yes, we are still in our gold position. We lowered our stop down to 1837. That locks in well over $220 per ounce in gold since we've been watching it from the short side. So whether that's going to mean anything or not, I don't know, but we'll have to wait and see. The British pound position is up slightly, but still, it's only up about 60 pips, so it's not really much so far, but it's better than being negative, and I think that in itself is pretty good. Now, we've got, like I mentioned, we have Shane Smolan coming in at the break, and that'll always be a good show. But the main thing, here's one other thing. Since we were looking about that NASDAQ, let me bring this up to you today because this is the first time we've seen any negativity coming into the NASDAQ. And it's short term because you're looking at only a 15-minute chart over the last 7 or 8 hours. But from the high that was made, we've dropped down. And all we were able to do was to make a 382 retracement in that. Now, that may or may not be important. And believe me, I think it's important because when it exceeds those numbers, you don't want to stand in front of it. So if we start getting above 12,200, no, let's strike that. Try it again. 12,180. Let's try that again. 12,120. Wow, this is terrible. Sorry, boys and girls. Take a break. I'll take a shot of vodka. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and we have found out from some of our friends here at TFNN that market closes at 1 o'clock New York time on Friday. I believe the Globex markets will be open on Thanksgiving, and this will be a big surprise to a lot of you folks, but not many people outside the United States celebrate Thanksgiving, and boy, we have a lot to be thankful for this year. One of them is the fact that we only have one more month to get rid of 2020. What a year this has been. Shut the front door and raise the rent. Hopefully 2021 will be a lot better, but my goodness, it's going to be volatile, that's for sure. And this is what we like. We like to see the volatility come in. Let's talk about Bitcoin, folks. You can see here 19,600. We're almost at the double top. And as we get to that double top, we have some of our friends here have been kind enough to send us this free and free. Somebody rescue me. The fear and greed index here. You can see that we are at extreme greed right now. So there's going to be a correction. Whether it's due to the double top or not, I'm not sure. But one of the things that you really want to do, folks, here, we have a very strong trend moving now since October. We've exploded to the upside. And remember, if you've read the newsletter over the weekend, you'll find that we are really watching 382 retracements in Bitcoin. We're not trading this, folks. We're just watching it because eventually this is going to be a big thing. You know, just a few years ago, we had, it was only like $1 billion worth of Bitcoin out there. Now you're talking about $500 billion, I think, across all the different markets. So it'll be pretty good. Marshall's telling us that 2021 is the year of the ox. Didn't know that one. What was it? This was the year of the rat, wasn't it? I don't remember. Oh, shucks. I can't remember. This was the year of the rabbit, the rat. I don't know where 2020 was. I don't even remember. And the princess, yeah, it's the year of the rat. That's what I thought. Okay, let's move on here and talk just a little bit about the grain markets, folks. First of all, these are some of the things that Rich Anderson looks like. He pays a great deal for these weather reports. This is showing the different, this is Argentinian weather and also Brazilian weather. And you'll notice those really, really dark red spots, folks. That is extreme drought. And that's why we're seeing such a big move in some of these grains. Now, look what's happened. Look what's happened in corn. Since we were looking at this, if you remember, I said possible on Sunday night that we might be looking at a market that had a lot of topping patterns in it, but it didn't, and it opened higher instead of lower Sunday night, and so you had to stand aside. But look what happened on Monday. The market broke all the way down and stopped at the 382 retracement. Now, that's not a lot. We only dropped, 12 cents in corn. But in corn, that's a great deal because the margin is small, and that's a $600 move. Now you've went up, and you've almost made a double top up in here. So we're still watching it for some type of a shot like this for I'm going to cover natural gas next, Ruby. You got it. Let me finish up with this when we have plenty of time to do it. But I want to cover these just to let you know that they're all watching the same thing. Now, here are January soybeans. You'll be able to see here we're watching January and March now. Take a look here. Then we got a couple of questions we better ask her. It says from Bo, it says on Fibs, you always. Yes, when we're doing Fib retracements and expansions, always start at the lowest spot and the highest spot. Always start that X. That's where that should start at. You always need to start there because that's the way to look at it. A lot of times they'll be really close, but it won't make any difference. But especially when you're looking at 15-minute charts. But always start at the lowest and the highest. That's where the answers. If you don't, you're in the middle of a swing, and that's not really what it's looking at here. He said that 1118 to 1123 is just noise, and that Fib could spot. I don't know what market you're talking about there, Bo, but if you'll tell me, I'll try to remember, what we're looking at right here. Now let's move on to the next one that I wanted to mention, and this is the natural gas. Ruby, I really like this natural gas, folks. Look at this pattern in the natural gas that we've been following. Yeah, those numbers are close enough for double tops. You're absolutely correct, Bo. So you can use either one as long as they're real close. If they're 1 or 2 points, it's fine. But if they're more than 3 or 4 points away from a high, you've got to use the actual high or low. That's where you get the actual number. Look at the NASDAQ. To the exact tick. That's a huge one. That's what turned the whole market yesterday because when the Dow Jones was up on the day when the NASDAQ was down 100 handles and the S&P was still up on the day. That was telling you the market was extremely strong. Okay, let's take a look at the natural gas. Beautiful pattern. ABCD completed. Our last rally, this last 5-day rally, exactly like the one that we had on November 2nd to the 9th. So we got a 5-day rally. We're still in a downtrend. We've completed the ABCD pattern on the downside. Now watch for a retracement, folks. That's what I'm watching for in the NASDAQ now is watch for retracement because you're going to get one. Now, you don't want to get one like you had where the market gapped down quite a bit because this thing, if it gets below 252, you're looking at a handle of about 195 in the natural gas. So it's got to hold the 252, and this is the December natural gas. So pay attention to that. And you'll be able to see that is what's looking on. Yeah. Yes, the Russell is up 25% in number. We've had tremendous moves up, folks. And part of the reason is, if you remember, just glancing through the newsletter over the weekend, a lot of it is due to this Robinhood thing. It allows people to buy fractional shares of Tesla. And remember, folks, Tesla is not an automobile company, folks. It's a data company. They have the Starlink system of satellites. They have the authorization to put up 30,000 satellites just above the range of where the planes fly up there, up about 3 or 4 miles high. And when you start seeing these come up, you're going to see, you won't be able to see the regular stars. There's going to be so many. There's going to be 30,000 satellites that cover the globe. And believe me, China is not happy about that. because this is I know what all that what they're doing with all that data. I'm sure they want to alert us to really good sales and tell us ball scores and stuff like that. They're not use it surreptitiously, to track us where we are and other things like that. These are things that'll make us very, very happy and tell us where to go shopping and what TV shows to lose. I'm sure that's what they're going to use all that data for. But Tesla is a a data company, just like Amazon. Amazon is not a bookseller or anything like that. Yeah, sure, they made some money off retail, but all their money now is coming from the cloud. It's all that stuff. It's all data. That's basically it. Who knows? Okay, now, Mr. Elon Musk is one smart cookie. Anybody that sells shorts him is like selling short Peter Thiel. You don't want to do that to those types of people. They're like trying to sell short Steve Jobs. These are savants, folks. You don't want to stand in those. Yes, the January is the natural gas contract. I'll be switching over to that this weekend, but all I have now is my December up. I haven't made a recommendation in that. I'm still waiting to see what this next correction is going to be, and then we'll keep a close eye on it. Hey, guess what? We're going to have the Shane man bail me out. Shane, where you be? I need some help. So he'll be giving us some good information here at the break, and we'll be watching. Now, those are the main things I wanted to cover, and we'll be right back with Shane Smolan, thewolftrader.com.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Come back, Shane. Come back, Shane.
Good morning, Larry. How are you?
I need help.
You need help?
I overslept. I overslept. My gosh, I slept 8 hours. I didn't even know what day it was. I thought it was Christmas Day. I kept looking for the tree, and I couldn't find it. Yes, sir. We're ready to go for you, my friend. So tell us what you're looking at. Could you tell us a little bit about the COV, what's happening, from your perspective?
I did not do updates on COV, but I have a COVID transit. Maybe at the break I can load it, but I've had this COVID transit that has been tracking these peaks in COVID, and it's tracking them almost to the day. And I have there's 3 peaks on this, and the final peak is coming on November 27th. So that should be like a lockdown peak, which, and it makes sense. All the lockdowns are increasing right now. So hopefully we can start to move past this. It seems like we have a lot of promising vaccines that are out, and hopefully we can get back to normal within the next 6 months to a year. So.
Okay, fair enough. Just go ahead and show us what you're looking at today. That'd be great.
Sure. Okay, first of all, happy Thanksgiving, everybody. I hope everybody's having a great week, and I hope that everybody's able to spend some time with friends and family, and definitely stay safe. Try to keep those gatherings small if you can. So, all right. First of all, I want to talk about the fear and greed because this is really important. This is the first time that the fear and greed is pushed to new highs that were the highest levels since the March lows. It has not been this high for a long time, since going back to last January, February. So we're at a level of 88 right now. So that, to me, that's a worrisome sign about the S&P that this is getting a little bit extreme. It's getting a lot extreme, actually. So we have to be very careful about this. From this perspective, from the contrarian perspective, things are getting greedy, okay? Now, this is the actual graph of the fear and greed index. So you can go back here and see that we've rocketed straight up here, all the way back up here. I'm circling it here to where we are now. And you have to go back to essentially last December, January levels to see these types of levels. So we are now finally at a very extreme level on the S&P that this is something that I believe this is significant. We need to be careful about this because Fed or no Fed, when these things get up to these types of levels, the market can be at risk of reversing. So that's just the first thing. I wanted to give that broad-based perspective. Now we do track the planetary speed index, and this is an example of the planetary speed index from September, October, November. And what this does is this tracks the actual speed of the planets as they move around the Earth from our geocentric perspective. So you can see in these labels here that the market does a pretty good job of modeling this. I really like this indicator. You can see in the level A here, this was a peak. B was a relative low. C was a peak here, and then D, we came down in this October. And actually, during that whole rally that we saw during the election or before the election, this modeled it very well. This is actually making a low, coming into a low right now. But one of the things to remember is that we're in a week of positive seasonals right now. So I did expect the S&P to rally this week, and we have had some very nice calls on this. I'll get to those in a minute. Now, the next chart here is the Fed juice. So this is the S&P 500. So we actually hit a high yesterday in terms of transits. I know you've been talking about these retracement levels coming in at yesterday. I think that this is possible. This could be some type of a high. And we've been, I have this new fast Fed indicator too that we trade, which I'll get to. But that has been trading this market very well, and it actually went short. It's actually short right now. It went short yesterday. So again, I think we have to be very careful at these levels. Now, the Fed juice still is in a buy. It's been very persistent here, but I think it is weakening just a little bit. And again, this week creates so much chaos because we have just so many cross currents going on. We have light volume. We have a day that's deleted, which is Thursday. That creates strange things. We have rollover on the metals markets on today, actually, is rollover. So you have all of this chaotic environment going on right now during the holiday week. And the holidays are some of the toughest times to trade in general because of that. So the Fed juice is still in a buy, but I'm very cautious right now about the fact that the sentiment's getting so high. I think we need to pay attention to that. So this is a zoom of the Fed juice here. You can see that it's possible that this could be trying to cross down in the next day or two. And if that crosses down, then it's going to create more of a negative situation right now for stocks. And the problem is, like I said, in these seasonals, the market gets hijacked by these seasonals. So you have a week like Thanksgiving where sometimes it doesn't matter what the bigger indicators are doing. It's just going to go up because of the holidays. And that's particularly true in Thanksgiving. A lot of holidays, actually. Thanksgiving, Christmas, 4th of July, a lot of these have very positive seasonals. So, I try to focus on the seasonals when we get to these weeks, and I'll kind of flip around and say, look, let's focus more on the seasonals, which is what we've done this week. Now, we also track the dollar juice, which measures the relative pacing of the S&P to the dollar. This has been in a sell since the 19th, and this has really not moved off of this sell. So we have a conflicting picture here in these big term indicators. All right, so the idea here is that we have conflict on the big picture, and I'm a little bit concerned about those levels, like I said. Now, this is a zoom of the dollar juice. By the way, I post these every day for the S&P newsletter. They're posted on the website, so if you want to see these charts, you can subscribe and see these daily. But I do post these every day. They post around 2 o'clock, and this is in a sell. So we have a conflicted picture here. I really like to see the dollar juice and the Fed juice aligned in the same direction. So I think right now we have this conflict, and then we have the short-term seasonals taking over to the upside. Now, this next chart here, this is the Fast Fed 2.7. This is a new trading system that is available for our Platinum subscribers. This is a new service I've started, and this is a straight-up trading service with stops and targets. This is, the other service that I showed you is more like you're looking at all the evidence and you're weighing and balancing. These are the actual trades that happened, the last 3 trades. It's been crazy. I mean, it's been crazy accurate on the S&P. I know it looks like it's not real, but it is. This is what actually happened. And so it's almost been picking these highs and lows almost to the T. And right now it is short. These fast Fed trades, they're going to always try to reverse long and short, long and short, long and short. And they last anywhere between, I would say, 2 to 5 days. Sometimes they can go up to 7 days. But we know very clearly when they're coming, and I post the targets and the stops. And these trade very small sizes. They trade micro contracts because the targets and the stops are so wide that you have to trade a very small position. So it's not Larry, I know you put up these charts all the time and you're lining up these perfect opportunities. And a lot of times people will try to bet larger sizes on those type of trades. But this is more of just like a systematic, you're always trading, very small position sizes. But this is available now. And we have this for the S&P, and we also have this for gold. Okay, so these are the actual trades. This is actually how it's been going down. It's a relatively new service, but I did put it up there now. It is available if you want to sign up for it. We have right now S&P and gold, and I'm going to be adding more symbols as we go through time. So I also have a new cycle that I'm working on. We'll talk about that when we get back.
We've got to pay a few bills. We'll be right back with Shane Smolan, wolftrader.com.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with the wolftrader.com. Shane Smolan, you want to continue, my friend?
Sure. I also thank you, Larry. I would like to talk about some new cycles that I'm creating. So I'm creating a microcycle service that's coming out, and it involves these what I call alpha omega microcycles. And so what these are 2-day cycles, very small cycles that involve every single symbol across the board, but it gives you a very good small term look on the market and to how the markets would act. So this is an example of what it would look like. There's a table for every single market, and I've also optimized this with low profit factors, low volatility. So it's optimized. The optimization is also very important too. So this is coming out, and this is an example of how it would look. This is the euro here. So this is an example of some trades here. There's no stops or limits on these, but this will be coming to all the newsletters. So for example, if you're in the S&P, you'll be able to see the alpha omega microcycles coming to the S&P, or if you're in the metals, you're going to see it there. So I'm just excited about this. I feel like this is going to give us a lot better short-term focus on these markets, and then combined also with the fast Fed, I feel like we're getting a better look on this. So let's talk about those metals real quick. I know the metals have been going down, and we have been. I think we've done a pretty good job with the metals here. So this is an example of what the closing bell would look like for newsletter subscribers. So we've been calling these gold markets down for quite a few days here. And what I do is I summarize the market into next day, medium term, and longer term analysis. So depending on what your time frame is or perspective, you can see this to make a decision based upon what the Fed use is doing and the other cycles too. And then I have over here the shorter term cycles, which is like the RSI and the microcycles and the daily statistics, which we put on the charts. I put on the statistics, which day is the highest statistic down or which day is the highest statistic up by day of the week, which day likes to reverse. So it's a really interesting dashboard that you can see every day, and I think it really helps you make a determination on what to do. Now, let me show you this chart here. This is the actual gold, and we've had this Fed use in a sell since 11/12 on the gold. So I think this gold still has some downside pressure. The Fed use is still in a very clean sell here. It has never really crossed back up. And I think one of the things that hurt this market in particular was, you have these banking holidays that happen and there's no Fed use. And so recently we had one on the Veterans Day, and gold really took it hard because these markets need the Fed juice to keep going. And so even when you have just one day without the juice, it really starts to struggle. Now, the next chart here I'm going to show you is the dollar juice on gold. This has been in a sell since November the 10th. So again, this is the type of chart, Larry, that I like to see when the Fed juice is an agreement with the dollar juice. Then you start to get these really big trending markets like we're seeing in gold. Like I said on the S&P, that one's kind of in conflict, but gold is not. Gold is a very clear downside picture right now. So, when I see those two lining up like that, I really get excited because I feel like there's opportunities there. Or, like I said, at least there's an opportunity. It doesn't guarantee it, but there's an opportunity. Now, this is the Catmaster signal. This is one of the charts that we post every month. It's a composite of multiple cycles and all transits, all different things. But you can see here that gold makes this really clean sell on the 24th, and it's persisting down all the way through the beginning of December. So I think gold, you could continue to see some pressure here on gold. So that to me, when you see all this stuff line up, that's when you get the big moves. I mean, it's best to put as many of the odds in your favor as possible, and I think gold is doing that right now. So that's what I like to see. And then also, if we look at the annual cycle, this to me, I like to line up the market tape with the actual cycles. Okay, so this is why I don't just trade off of the astrology alone. I don't believe that you can get an accurate picture that way, because there's so many new things coming into the market with the Fed and all these programs. And it's just, I want to be able to account for all of this new stuff coming in. So what we see here on the seasonal pattern is, though, we do see a very, very important low on gold coming in, probably around the 21st or the 20th, like in late December. So we've still got about another month of this in terms of the annual cycle. But then gold really starts to get strong on this annual cycle. And I think it has the potential to see a rally here. So we will see. A lot depends right now. I'd like to get all of this political environment cleaned up. I'd like to get past all of this so we can get a cleaner picture. But I think we do have a very, very strong potential here for some type of an important low coming in December. So, we'll see. Again, the market tape has to agree with this. So if the Fed juice is still selling, then that's not really – I'm not really interested. I want to see the Fed juice, the dollar juice, and then the cycles actually all aligning up together. So that's just that. And silver is kind of doing a similar thing. I think gold is a better market in terms of actually the forecasting. So let's talk about its related cousin here, Bitcoin. Bitcoin, I call it a related cousin because it's related to the liquidity cycle. But we've had Bitcoin in a buy on the Fed juice since October the 9th. So the Fed juice has done a very good job of tracking this whole rally on Bitcoin. And I added Bitcoin actually as a request from a subscriber, because subscribers asking me, they say, can you add this symbol? So I added this, and I'm so glad that I did, because I feel like we've done a good job in tracking Bitcoin too. And like you say, Larry, I don't believe Bitcoin is a bubble either. I think this is here to stay. And I think there was a reason why it was listed on the CME. I think once something is listed, I think it's kind of the chosen golden child. So I think Bitcoin is really the gold standard here. So I think that the more you see this Bitcoin accepted as payment on Amazon and all these different services, that you're going to start to see this technology increase. Now, maybe the government is just using Bitcoin to find out the technology to do a currency themselves. I've often felt like the next big round of quantitative easing is going to involve some type of cryptocurrency from the government just issuing crypto. But that's way down the road right now. But this has been such a positive market, and like I said, I feel like we've really done a good job of tracking this. And we do track this on the cryptocurrencies. This is updated daily too. Bitcoin is the only one that I can do the Fed juice on, so I do update the Fed juice on Bitcoin every day. So that's that. So going back here to the S&P 500, if we look at the actual Fed juice here, not this one. Let's see. Here we go. So a lot of people ask me for this graph here. This is the actual Fed juice, the net operations of the Fed that I look at. And you can see here that there's this big, this is in this letter H here. I'm going over here. On this letter H, there's this big spike here. This was around the spike on the vaccine that failed. But you can see this also coincides with what the Fed was doing. And this drop here represents the Veterans Day when there's no Fed juice. And then you can see right away the next day we have this hangover which I often talk to people about. When you look at these banking holidays, the markets struggle because there's no Fed in there. There's no Fed there. There's no operations, but did start to recover, and the Fed really started to try to push back up here. You can see back into this letter J. So that's kind of where we are right now on this. The Fed is definitely trying to help these markets to stay up, but I'm just a little concerned right now about that the sentiment being so high. Anytime you get above 85 and you start pushing back up to those levels that we saw back in January before COVID, we're at pre-COVID levels. So.
Wow, boy, great information, Shane. Stay with us, folks. Shane Smolan, thewolftrader.com.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Shane Smolan, thewolftrader.com. How would you like to wrap up the Thanksgiving show, my friend? It's up to you.
Well, again, I wish everybody a very happy Thanksgiving. I hope everybody stays safe out there. And I'm just going to share with you this graph from the newsletter since we're basically at the end of the month, so I'll go ahead and share it here. I did have this final COVID peak here at 1127, okay? So the last one was 8.5, which coincided with the last peak. There was a low on 10.3. So hopefully this is it, guys. Hopefully we're seeing this vaccine come out, and hopefully things can start to get better and we can get our lives back. I mean, I think everybody's just exhausted by this whole COVID thing, and I really I really think that we're probably looking at, we're probably going to be turning the corner here soon. So this is just a newsletter here that I'm scrolling through. These are just different things that we look at. I do summarize the month on a grid so you can see. We are coming into some green here coming up in the next few days. But essentially that's it. So if you guys want to go ahead and visit, it's wolftraderfutures.com, or you can type in fedjuice.com, www.fedjuice.com. We own that domain. And if you want to check it out, there's a 7-day trial on each of these services. And I will be adding that micro cycle service soon. So go on over and check it out, or you can chat with me if you have any questions. And Larry,
Shane,
yes,
we have a question. Do you trade the micro futures on this micro thing that you're looking at? Or is that what you're doing?
Well, yes. The fast Fed has to trade on a micro contract to keep the volatility. I want it down. It's one micro contract on gold per $20,000 account. So that keeps the losses between 1 to 3%. Sometimes it might get 4 on a loss. It's based on the volatility. You have to keep that. You have to trade it on a microcycle, because when you optimize these cycles and systems, they don't optimize well when you put tight stops on them. So you have to have the wide stops. So you have to trade small. So I know it's not as exciting, but to keep that risk controlled, I would say between 1 to 3% per trade. You have to be trading that micro contract. But there's a trade coming every few days. That's the good thing about it. You don't have to sit and wait for setups. It's always trading all the time. So that's the advantage. The downside is it's not as exciting because you have to trade smaller, but it's optimized.
Thank you very much, my friend. Happy holidays to you, Shane, you and your family, and we'll see you sometime in December.
Thank you, Larry. Take care, everybody.
Be safe, everyone. Have a wonderful Thanksgiving. We'll see you all Monday. Bye-bye.